Rajat Dhar,
Yes, sir.
your thoughts?
देखिए,
जी.
my thoughts are as a director for Indian Investors Federation, I will highlight couple of pointers which are from the perspective of Indian investors. So when I am talking about investors, they will be a normal retail investors to as high as the HNI investors.
जी.
Now, when we are talking about tax rationalization, they has to happen in 2 or 3 different ways. First and foremost, there are AIFs. So AIF category 1, 2 and 3. So tax pass-through status is available in category 1 and 2, but not in category 3. जिनको नहीं पता है, category 3 AIFs are those AIFs which invest in venture capital, venture financing, your fund management, fundraising, which in turn goes into real estate, infrastructure and other e-commerce platforms and other things. That means that in turns affect job creation and that in turn affects the job creation and everything else. That is one aspect. Taxation की ही मैं बात करूं, we are expecting that government should come with tax rationalization where there is a difference in tax for fixed income schemes. Say for example, debt NCDs, non-convertible debentures or corporate deposits are taxed in a certain way. Then there are bonds, Government of India bonds. If you take directly secondary bonds on a trading platform, you will be taxed as per your tax slab. But if you take the same thing through mutual fund route under SDL, state development loans, you will be having an indexation benefit. So we, as an investor, we fear that government might again now block those holes. So that might be the dent. Because last time we have seen that there has been a capital gains tax on equity investment.
Yes.
So difference has been taxed. However, the increase in the exemption limit as was expected last year had not happened. In my last media presence at Awas, I had already told that CNBC Awas that we should expect at least exemption limit to be raised as high as 8 lakhs, including all the deductions for the retail consumers, to say that. Because inflation itself is on the higher end.
Correct.
And the saving avenues like EPF and PPF, EPF above 2.5 lakhs is taxable EPF now. So at the end of the day, when we're talking about the tax rationalization, we should also see that there are preferential corporate tax of 15%. In some segments, there are 15% preferential corporate tax rate. Now, these should be extended to those sectors and companies which are working in PLI announced schemes. So there are certain sectors, the companies and sectors are working in those which are under PLI scheme by Government of India. They are not able to be in the 15% tax bracket. To say for the
so incentivize those who are embracing government schemes. Try and give them a tax leeway from 22%, bring it down to 15%, encourage more people to get into public, private and PLI. So because PLI is also supposed to, is aimed at encouraging manufacturing and to try and, please complete.
Until we are not able to scale it up, we can't be a manufacturing hub. That is point number 1. Now the point number 2 here, the important point that we can see in next 3 years is if automobile industry in next 5 years or next 10 years looking is like we have an audacious goal as Indians ki we will have at least all public transport electric vehicle. Now what would happen to 10 lakh people who are actually in the automotive industry or ancillary industries जिसमें आधे से ज़्यादा component will be of no use. So then there will be job creation issues and unemploymental issues coming up in next 2 to 3 years.
उसमें एक ये है कि electric vehicles से ज़्यादा it is flex fuel and alternative fuel. So there is a big push for hydrogen, and if hydrogen happens, then that number that you talked about, automobile industry, people becoming useless, parts not happening, that number will also greatly reduce. So it's not going to totally disrupt the automobile industry.
Disrupted, but yes, reskilling and upskilling has to be done, and so that there are no gaps in it.
Correct.
So that last mile and last personal connectivity has to be there.